Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal studios. I'm Prashant, with me, my colleague Sonia and Nigel. Guys, hi, morning.
Hi,
morning.
Good morning. Well, how are you feeling today?
Very good.
Always good, right?
Always good, always optimistic, but good cues, right, for the market as well. I mean, the big tech companies in the US did well.
Yeah.
Back home as well, good earnings from Tata Consumer, from Bajaj Auto. So I think the market is getting some more, ammunition to move forward.
You know, the fact is, Sonia, if it had not been for the tech earnings that you mentioned, we would have sort of started on a somber kind of note. But this lifts things, and I'll tell you why. So, last night, you had, for the first time in a very long time, that stocks fell at the open, but they did not do what they've done for weeks on end, which is, the dip gets bought. They did not bounce. The S&P 500 ended lower, sharply lower. The Nasdaq was down even more, almost a full 2%. The regional banks index was down 4%. So, the First Republic Bank, which had reported results recently, that fell almost 50% by close. It was a late fall, and that kind of had contagion impact on the other regional banks index. The measure is on your screen, a full 4% cut. So, so far, the story is pretty poor. Economic data also has been mixed. So, new home sales data is very strong. On the other hand, consumer confidence is almost at a 9-month low. It's always is the case that at the end of a cycle, and if you believe that we are at the end of a rate hiking campaign, when policymakers start to wait to assess the impact of what they've done, data gets very fuzzy. It's not one way. Data was one way, beating expectations when about a year ago, 6 months back, but it's not the case anymore. But it's always like that. It's to be expected and anticipated. It gets confusing, and that's where we are at. Now to the good part, right? After close, two giant IT companies reported numbers, Microsoft and Google, Alphabet. Both beat expectations in a very handsome way. Actually, if you look at what stocks are doing post-market in the US, Microsoft especially, we're seeing large gains. Actually, the guidance which came through from Microsoft was also very, very encouraging. So these are the two things which I think will lift the broader sentiment, especially in the tech space, when we come back into trade in the US later tonight. But we are trading now, and I think this should, at the margin, limit some of the damage had these numbers sort of missed expectations and not been as good as they are. So I think this is the silver lining this morning that we are beginning trade with. Now let's come to the market here. The Nifty yesterday had a flat close. The promise of another rally, a follow-through rally after Monday's big move, it was not really, it did not materialize really. The levels remain the same. On the Nifty, you continue to watch the recent high of 17,863, which is not very far away, about 100 points out. On the downside, the level that the market should hold on to is the 17,554 level. If this does not break, one could say that the uptrend remains intact. On the Bank Nifty, the levels are the same, 78.6% retracement of the entire fall. Again, the Bank Nifty had a pretty flat close. That stands at 42,965. That's the upside level to watch. On the downside, the recent swing low of 41,962 has to be protected if some selling pressure starts to come through. Watch the first hour or so, and if the impulse that you start to see, and you'll see it on the screen, is to try and buy the dip, I think go with that. The SGX is indicating an open which is neither here nor there, about 27 odd points lower, 17,759. Sonia.
Oh, absolutely. And I think the market will latch on to some of these cues that you mentioned, right?
Yeah.
So there are 2-3 of them which could aid the market sentiment today. Whether it takes the market out of its long-standing range of 17,600 to 17,800, that only time will tell. But there are more pluses than minuses as we kickstart trade. So as Prashant was pointing out, the US big tech companies posting very good set of numbers, better than street estimates. Not just Microsoft, but Alphabet as well. And Microsoft saw a big jump in revenues from its intelligent cloud business. So, that as well aided the sentiment over there. Even Alphabet, posted a profit in its cloud business for the first time ever. So that's a pocket that's doing pretty well. In our own markets, both Bajaj Auto and Tata Consumers delivered this time. Bajaj Auto's margins were at a 9-quarter high. For Tata Consumer, it was pretty much a beat on all parameters, a double-digit healthy revenue growth. EBITDA was up about 15%. And in that context, today is an important day of earnings. So a lot of numbers coming through. There's Maruti, there's Bajaj Finance, there's lots in the life insurance space, both HDFC Life and SBI Life come out with numbers. KPIT Tech will be tracked very closely. It's been one of the strongest and most resilient stocks in the mid-cap IT space, so comes out with numbers. Getting back to the markets, yesterday FIs sold a bit. It was nothing alarming, about 400 crores, less than what they sold in the previous, on an average in the previous 5 trading sessions. And the Nifty, as I said, continues to be very range-bound, 17,600 to 17,800. The SGX Nifty is also hinting at a flat start. So let's see, there are positive cues that the markets can latch on to, but whether we move out of the trading range, maybe you just have to be a bit more patient.
Well, that's right. Sonia, but the very fact that the SGX Nifty is suggesting a bit of a pullback, I think that buy on dip thesis will hold. And in fact, if you hold on to that 17,650, you'll have to say that uptrend, the near-term uptrend, is pretty much intact. Now, overnight, we did have the Dow that ended lower, but as Sonia and Prashant mentioned, that you had a couple of positive earnings, both Microsoft as well as Alphabet. Both of them delivered good numbers, and that's why we should see some green. Now, just looking at the weightage, Microsoft is in the top 5 weightage, both on the Dow as well as on the Nasdaq, and Alphabet is in the top 5 on the Nasdaq itself. So the Nasdaq should clearly rebound today. The Indian markets, well, we came off the highs yesterday, but that was because of the expiry-related factor. So the Nifty Financial Services Index, if you look at the Nifty Financial Services Index, as well as the Nifty Bank, both of them moved down, particularly in the last 30 minutes or so. That was expiry-related. You want that to be undone today. So if that was expiry-related, you'll see a bit of a bounce back. That's the perfect chart that we're looking forward to. In terms of institutional flows, well, the previous session, we had a big buy number. That's DI and FI put it together, close to around 750 crores. Yesterday, that number came down a little bit. But the FIs, they continue covering shorts. They covered close to around 7,000 short contracts yesterday. The short positioning from more than 90% just a couple of weeks ago, it's come down to around 55%. So a lot of short covering is what we have seen. Moving to the index options data, well, 17,800 as well as 17,800 call and put, both of them were very, very active in trade yesterday. Both of them added 40 to around 50 lakh shares odd. But the key to note is where is the highest open interest? Given that we have expiry that's going to play us in the next 2 sessions, 17,700 put, more than 1.3 crore shares, in terms of open interest out there. So clearly the positioning is such that lower levels get defended, while at higher levels we're likely to see some supply. So let's pull up the levels then. Resistance will come at around 17,830. I say this because the 100 DMA comes in out there. On the downside, given that 17,700 put was fairly active, 17,675, that becomes an important support level. 17,650, 17,675. The 200 DMA is a little bit deeper at around 17,625 odd. Nifty Bank, it came off yesterday, but the crucial support is closer to around 42,500. That's just in the near term. And you'll want to see, that down move that we saw in the final 30 minutes getting undone. If that's the case, we should brace ourselves for a bit of a recovery and a bit of buy on dips. So the 30-40 point downtick actually is a bit of a blessing in disguise. If you get that, I think you need to look to buy into it, going by the data points, and hope that you see a bit of a rebound from there as well.
All right. 30 points lower on the SGX is what we have. Before we go any further, let's quickly tell you what is lined up here on the program in the first half hour of the show. We get you updates from markets across the globe. Dan Feynman is our guest in the show of Credit Suisse. He's joined us to discuss the global setup. Our research team will bring you the top list of stocks to watch out for, 10 in total as always. And at 8:30, we talk markets with Devin Choksi of KR Choksi Securities.
All right, well, let's kickstart the show now with some views coming in. One of the best minds in the business, Rhythm Desai of Morgan Stanley, first up on the show, saying that domestic ownership stake in India's top companies rose to an all-time high, while FPI stake fell to a 9-year low. He says institutions reduced exposure to financials, which continues to be Morgan Stanley's favorite sector as they expect acceleration in credit growth.
Money market views now. This is Kunal Sudani on the rupee. He's, of course, with Shin Bank. He says global equity markets fell and bonds rose, boosting the yen and the dollar. U.S. consumer confidence dropped while Fed's manufacturing and services indices decelerated. He adds fears of banking sector fallout return as First Republic Bank refrains from giving guidance. Dollar index continues to find strong support at 100.85 level for the USD INR pair. Kunal says 81.85 to a dollar acts as a support, while 82.25 to a dollar is a resistance.
Right, and on the bonds, Neeraj Gambhir of Axis Bank says the Indian 10-year benchmark bond yield traded sharply lower, mainly driven by strong bidding in Friday's auction and follow-up buying the next day. SDL auction supply was lower than anticipated, and lower oil and US Treasury yields also aided the sentiment. Neeraj says going forward, the market will take cues from auction demand, SDL auction size, and the FOMC due next week. And he expects the 10-year benchmark to trade in a range of 7.05 to 7.20%.
Okay, so we have the equity calls, we have the money market calls as well. Let's tell you about the stock-specific action that we're tracking for you today.